Hi all, this is Ashish Kyal here. Welcome during the midweek. This is an exclusive revision session with Mentees, and I'm glad that many of you are able to make it, but I can see many are still not joined in. So I just want to understand this program or this exclusive revision session that we have started is to be in touch with all the participants of the mentorship batch from the past, and I would like to know, will this help you in becoming a better trader? If yes, then we continue with something like this. If no, then we check it out. So this is surely just for educational learning perspective to possibly understand your challenges, your queries, your doubts, market views. I'm going to share across lots happening on Twitter. Okay, I can see a lot of you are uh, okay, excited about this. So I think we will continue with something like this since it's helping every one of you. Fantastic. So we will continue with this. So first of all, let me very quickly talk about what's happening in market, and it's very important you understand the current state of the market. I'm not sure if you all of you are following me on Twitter or Telegram. Since 2 days, a lot of interesting things happening. I've been pointing out the market will reverse after 3 p.m. and it reversed at 3 p.m. Today morning, again, I talked on CNBC. I was about Nifty. I told market should go into buy in the second half, and it went into buy in second half. So it's very interesting, and the way it has been behaving is precisely basis of the cycle theory and wave theory that we have been practicing and we have been using. But some conviction or gut feeling tells me it is time to be cautious. It's after a long time I am saying this, that it's time to be cautious. If we manage to break that bank nifty level above 38,200, then bank nifty can continue on the upside. And if nifty can manage to cross that 18,000 mark, that's important. It's struggling around that, then we can say that the overall trend for bank nifty, sorry, for nifty also is going back on the upside. The two key levels that I'm going to keep a watch on for nifty is the low formed yesterday. I am going to share the chart also, but that level is going to be extremely important, which was the low at around on the downside. Let me just over here, let it open. You can see bank nifty. I published a research yesterday itself when the markets were going on, that what do we expect. In fact, this was published on 22nd of September, and bank nifty came here, came down here, and it is here. It worked brilliantly the way we were expecting it to be. And yesterday itself this happened. Okay, yesterday itself I was expecting bank nifty to come down, which it did, and then bounce back up. And this is where we are right now. So this is the reason why I was expecting bank nifty. So it is not only that, it is cycles that you see here, it is the wave theory, it is the OI, all of these things that we are talking about in mentorship is what I applied practically, and I had a view on how to go about it. Okay, that's what made me expect a pullback, because I was expecting after a see, I told you even on Saturday class in mentorship, when do we expect a triangle to happen? After a sharp rise, a sharp fall, you expect a triangle, and that exactly is happening now. So that is what I was expecting. So if the breakdown happens out of this triangle, then yes, the markets are going down. If it manages to go above this level again, maybe some other pattern is developing, maybe in the form of diametric. But for now, triangle looks highly probable. We are seeing that whipsaws around the case. So that is the reason. So keep reading this research, which I publish on wavestrategy.com. That will help you to get answers to most of your queries. Fantastic. Can we go for option writing at the moment? Sachin, at the moment, looks little risky because of the gap, and VIX is spiking up. So just wait for a day, I would say. Let's just see. Maybe intraday, yes. You can do intraday option writing and book half at the end of the day and carry half. Don't leverage much. And 38K open interest is very high, absolutely. It was crazily high. This is yesterday's chart, not today's. So it was crazily high yesterday and increasing. And look at put. Nothing is happening on the put side, and that's what concerns me. There is not much change on the put side, but look at the call side. And this, if you remember, has not happened for quite some time. This is after a long time we are seeing something like this fishing up. So that's why just be cautious but not bearish. I hope you understand my term very clearly. I'm again repeating. Be cautious but not bearish. Just let's see where it goes, if it manages to break down or not. If it breaks down below this level of 37,000, then maybe call writing will be a classic strategy. Then maybe you can start writing call aggressively on the upside. That's what the trades can be taken. Okay, I'm going to take one or two more questions now. After E in Bank Nifty, triangle pattern may break, then the previous support may be broken. Yes, that is what the expectation is. Can we get the opportunity to be a part of MOC or access the video later? I'm so sorry, Anand. No, we can't really do that because I think I have given you everything that is required. Okay, in the program. So this is different. I'm sorry for that. Wave terminal 1, Nilesh is asking of, then wave 2 can be down, but wave 1 is not following the impulse rule. Yeah, because it's a terminal, na, Nilesh. Terminal pattern does not follow the impulse rules, right? So terminal can't be in wave 1. Wave 1 can't be an impulse because it's a terminal pattern. So terminals will follow the rules of the corrective pattern. Okay, the 56-day low was just few days ago, correct? Is inversion likely going ahead? Chaitanya, brilliant question. 56 days low was just few days ahead, but I think it's already what, 6 days from there. So if it's already 6 days from there, we definitely are 6 days, 7 days ahead. So if the low breaks in next 4, 5, 3, 4 days, then still okay. We can still say the low of the index is broken or the cycle is broken. So I'm still okay with that. Unless if 56-day low should have been formed and it did not form at all, then I would have been cautious. With respect to 85-week low in November, that can be an inversion because, or maybe not, who knows, because the 85-week low has been over there in November. The problem is with 85-week is that you need a fall before that, and so far Nifty has not gone down. So there is a very high likelihood we form an inversion. The only other scenario is we crash before November. Now, I don't know. That happened in March, but will it happen again now? I'm not ruling that out. I'm keeping a close watch. If that happens, then November end can be a classic buying opportunity. But I don't think it will end only just in 1 or 2 months like in March. It will not repeat the same thing. Usually there is alternation, right? So same stuff will not happen. That's what I think. Okay, that's interesting. Can we extend the deadline to keep learning platforms open for another fortnight, Prakash? The learning platforms are open for lifetime. The traders forum is there, the Telegram is there, it's going to be there. It's not going to be closed down ever. So please make use of those platforms for sure. Wave C should be A plus B wave in time. Yeah, that's what Glenn Ellis said, Kenil, but I'm not sure. I never used C, that C has been following that time rule. Not a rule, but guideline, I would say. So not sure about that. October, very interesting. Yes, exactly. October is going to be very interesting. Also, one very interesting aspect is that if you look at the overall earning per share chart, have you tried give it a shot, EPS chart? No. I was just wondering, there is a sudden spike. Do you want to see the chart of earning per share? Why the price to earning ratio fall sharply? Because earning per share increased sharply after that. So that's very, very important. Earning per share has increased. So maybe go online. So I think we are running out of time. You can go online and check. Earning per share has been increasing very sharply. Because the earning per share is increased sharply, I think what has happened is, I'll tell you. overall, if you look at the overall movement of the market, there is a very tricky behavior which has changed with respect to the overall perspective. What I mean by that is, uh, because of the lockdowns, there was a sudden, stoppage of the entire flow of commodity across the globe, across India. Because of that stoppage, there was a sudden reduction in the velocity of money which circulates around the economy. That sudden glitch, I would say a glitch, or a glut, resulted into a strong economic lockdown. Now, and it was like a spring which is contracted. Now, as soon as things opened up, there was a sudden spurt. Now, what happened is, in a year, what was supposed to be equally placed and happen is happening over the period of just 3 months of time because of 6 or 9 months of lockdown. So the readings that we are seeing on the EPS and those things is because of the lower reading of the last year, and the base was very less. And then that sudden spot happened, and the sudden spending happened. Suddenly the velocity of money increased. Suddenly the commodity increased, and China, of course, the metals and everything, big time consumption, and created that euphoria. Because of that euphoria, many of the people who were on the sidelines in terms of hedging their positions, in terms of importing the materials, in terms of many of those things, or exporting, they got, if you are an exporter, you got a sudden benefit because now the price were increasing as the demand all of a sudden picked up, and your capacity is producing 100% and people need 200% of the commodity. So the base effect with a recovery and sudden demand surge resulted into the EPS shooting on the upside. Now, I think it's like a spring effect. Okay, it was contracted, suddenly it released and expanded, and now it will try to adjust. With this adjustment of the spring effect, I think the coming year 2022, we will see a period of consolidation, a sharp fall, a sharp rise, and now a period of consolidation in the economy I'm talking about. And so will the markets eventually. Despite of all of those crude price rallying, just try to think the inflation is still not picking up, which means the effect is still going to come in. It's just percolating on and then getting moved from this phase of sudden contraction, phase of sudden expansion, and now things want to stabilize. So that's how it's going to be. So that's how economy should behave. So 2022, I think, will be the year of consolidation. Yes, but between a big range from stock market perspective, I think it's going to be a big range of consolidation, possibly a big triangle pattern is what we should see. You will be able to apply. I think time cycle is going to be uh, very crucial because of these turnings that you are going to see is going to be important. Very interesting things are going to happen also is that if you look at from the job perspective, what has happened is many people on the lower levels have lost their job. At the same time, many who are at the higher levels have minted money, to be honest. Now, because of those people spending, it's helping the economy. But still, the pain lies on the lower levels. If the inflation starts going up, the people that are going to suffer the most are the ones which are in the bottom levels of the economy or lower than the middle class. Those are the people who are going to suffer the most, because when the food prices starts increasing, the crude is already on the tear, commodities are rising, eventually inflation will go up, and when that happens, these people will suffer a lot more. So I think government should take some action, ensuring they are proactive, not dependent on what is coming as a past data. Start tweaking the interest rate now so that we do not suddenly enter into the phase of superinflation, because everything is going like a spring. We have seen that happening, and I think uh, there will be a phase of superinflation suddenly that can happen. So that view is going to be very challenging for any central government to monitor and then do that. So that's going to change the bond market. That's going to make yields going haywire. That's going to make the entire economic recovery going for a toss, because now it will not be the lockdown that caused the worry. It will be inflation that will cause the worry. That is what is going to be happening. So let's see how it pans out. Very interesting times ahead. You need to be very fast in whatever you are doing and trading the markets with, and you have to do that. What are the Nifty counts? Can you let me discuss this offline? I have to rush now. Complexity of the wave and the Nifty count. Let me share across that with you in some time. Fantastic, guys. I think this was very interesting meeting today, and I try to explain what my views about the market are. And if this is interesting and you want me to continue, just let me know, so that we can continue this maybe once in a week or once in 15 days meeting. And this might help you to get some insights on continuation of what we are doing as a part of our mentees mentorship program. And thanks a lot, and pleasure to have every one of you here. Keep learning, keep growing, keep posting your queries and doubts on Twitter. A lot of activity happening, and see you soon again. People who are part of MOC, will see you on the MOC, and the others, keep learning and keep sharing your charts on Telegram. Thank you.